In 5 minutes. Good morning. Good morning. So, always looking for something new and exciting, which is an interesting word when you think insurance. New, yes. Exciting, not so much. But in the last couple of years, there's been some endorsement changes. So, what the heck? Look at those and see, if anybody's offering them. But even if they're not, if you know about it and they seem to work for you, then you can say, hey, I've heard this exists, so let's see if we can do it. Now, we pretty much insure whether it's personal lines or commercial lines on a replacement cost basis, correct? Because actual cash value just is old for old. We don't want to do that. But a replacement cost unto itself, whether it's personal lines or commercial lines, is not sufficient. We need endorsements because replacement cost means what you had is what you get but new. And pretty much, we can't necessarily do that. We might need to do upgrades because building codes change and zoning laws change. So replacement cost is great, but we need to think about other things. And even if we do value, do you use software in commercial lines?
Software for what?
For valuation?
Yes.
Okay. So, and if you put the same information in 5 different companies, you come out with the same value 5 different times. So, so we never really know what a building is worth. We try to create some kind of value, and we do have software that helps us, and the construction cost per foot and all that good stuff. And then there's always a little guessing factor. Do you feel this is enough? But even if we could get 100% replacement cost, which I doubt we can, we're either over or under in the value. I mean, I don't really believe we're ever on the money because I don't think we really know. We need to deal with ordinance of law. Replacement cost is great, but it's not enough. So the CP form starts off at ACV. Nothing new here. I don't care what edition we're looking at, ACV. And we always opt for replacement cost. On the building, you can get it on personal property, you can get it on stock. If you do the BOP, it's automatic, but we want a replacement cost. But replacement cost is good, but we still need to think about other things because replacement cost gets rid of the actual cash value issue. But it's still a replacement cost talks about, we deal with the lost or damaged property. If it ain't broke, we don't fix it. And we talk, well, for tenants improvements and betterments, a little bit different issue, but if it ain't broke, we don't fix it. And we talk about comparable material and quality. What you had is what you get, but new. And then eventually they remind us in writing that any cost increase due to ordinance, law, or zoning, not covered. So replacement cost is never perfect and it's never enough. And so we need to think about dealing with that. And do we get any ordinance or law coverage for free in the commercial policy? We get like a sales tool, and over the course of time, I've realized that whether it's the homeowners, the dwelling fire, the commercial property, the BOP policy, when a company, well, ISO, Insurance Services Offices, they called it coverage extensions or other coverages. All those are sales tools. And really what they are is saying, okay, these values in items are not encompassed in our definition of building, our definition of business, personal property, and frankly, we're sick of going to court with you. So we're going to give you a little bit of coverage to shut you up. And there's either a separate policy to buy more or an endorsement to increase it. And guess what? From the insurance company standpoint, it is not our fault if you don't have it. Whose fault is it? I'm looking at you. It's your fault if the client doesn't have the sufficient coverage. So they've named it and claimed it and decided to deal with it that way. And I have to take care of my streaming people. Give me a second. Okay, out there. Live stream. Please go online. Well, you are online. Minimize your screen. And you only got 1 screen per person. And then you'll put in your cute little name and then you can go back to me. And we will do another one, so sorry about that. So that's one. I gave you 5 minutes to get in front of your computer. I can't help you. Now I go back to, okay, there we go. So, am I staying here or going over there? Okay. Okay. So, we get, this is a sales tool. It's a coverage extension, increased cost of construction, and goes on and on and on and on. But pretty much we give you a whopping $10,000. And for a commercial building, that's like peanuts. It's really minuscule. And pretty much it only deals with upgrading that part of the building that was damaged. And I have to think about, what about dealing with undamaged value? You know, do I have to tear something down? And an example I give, not just tearing something down, but an electrical box gets zapped and they had to rewire the whole building. The electrical wire was not damaged, but because they had to upgrade the electrical box, now the wiring that went with the old electrical box doesn't go with the new electrical box. So if it's undamaged, you still might have to deal with it. And if you have to take out the stuff, we don't cover the cost of debris removal. And if you have to tear down part of the building, we don't cover the undamaged value, and we don't cover the cost to remove the debris. And then there's what was torn down needs to be upgraded, what was damaged needs to be upgraded. So $10,000 is just a taste to remind us that replacement cost is not sufficient. We have to be dealing with ordinance of law. And it's interesting, from a condo standpoint, Fannie Mae has started to require the ordinance of law endorsement beyond the master policies, which I think is a good idea, so that then banks will actually ask for it too. So this is a sales tool, as are many of the optional coverages or coverage extensions, to remind us that they might need endorsements to buy more. Or at least we tell them they need more, here, sign off here if you don't want to pay for it. If you feel lucky today. So there are ordinances that might make you tear down building if it's damaged enough, and we're not going to pay. If it wasn't damaged, we don't pay for it, and the cost to tear it down is not paid. And then when you have to rebuild it, we don't pay the upgraded costs of the stuff that was damaged, and we certainly won't pay the upgraded cost of the stuff that wasn't broke to begin with that we didn't pay for. So there's a lot involved. And I get this example from International Risk Management Institute that, you know, zoning laws are becoming more and more adamant. You know, we live in an older area of the country. A business might have, you know, factory might have, you know, been there forever, and now all sorts of residential areas are around them, and then they all get to vote, and now, you know, they pretty much zone that if there's a loss to that business, they won't be able to rebuild there. And so now they have to think about, okay, if something happens to us, we're going to have to go elsewhere. How much will it cost to do that? And that would be extra cost due to zoning requirements. As an agent, is it my responsibility to know individual business responsibilities? No. But I can say you might want to research about what's going on, because if you have to replace elsewhere, we can help you do that, but you need to buy coverage. I don't want to get involved with having to know every ordinance for every business out there. Insureds do have a little bit of responsibility in life. I'd like to make you think that it's all you, but no. So you'd have to, we could buy, you know, put coverage in for land costs and all that, and land siting and all that. And then ADA, you know, I remember when it first came in businesses that were already in business, and they had to make reasonable accommodations. They didn't have to change everything. But now if there's a loss, they'll have to envelop the entire code. Newer businesses after that, you know, you can tell the hallways are wider, and lighting and all sorts of things. But businesses that were already in play just had to do enough to let the public come in. But now if there's a loss, they'll have to conform to everything. So again, we might need to think about that. And, you know, retail stores, doctors' offices, restaurants, anything that gets the public, they did what they needed to do, but they might end up having to do more. And if that costs more, then we're not going to pay for that. They need coverage to deal with that. Or it will be a out-of-pocket expense for them. So what is a full code? Installing ramps, curb cuts, repositioning telephones, widening doors, et cetera, et cetera. So they did some, they might have to do more. And it will be out of pocket because it won't be covered. So there's always been an ordinance of law coverage endorsement. Now we have a newer one, 2017, which actually gives another option. As always, when we're buying it, no matter what edition, we need to check off coverage A, correct? That's for the building. That says if you've got $1 million on your building, that $1 million unendorsed only pays towards damaged property. If there's a serious loss and you have to tear down the other side, we don't pay that. And the insured says, but I got $1 million worth of coverage. Why not? Because the replacement cost says if it ain't broke, we don't respond to it. By checking coverage A, now that $1 million would be there for them. The damaged portion was already covered, and this endorsement says the value of the undamaged portion will now be paid too if you have to tear it down. But that's only for the value. So then I'd have to think about, and that would be part of the endorsement. So for the undamaged value of that designated dwelling. Hey. So always check coverage A. And then, you know, unless you're Samantha or on Bewitched or Tabitha, you know, either twinkle your nose or point your finger, it costs money to tear stuff down. And so we need to think about that. And ISO gives options on that. There's a coverage B, a coverage C, and a coverage B and C. My personal preference is B and C, is to combine things. The more limits you have, the more problems you'll have in life, correct? That's why as agents we like blanket insurance. You know, to have one limit to do as many things as we possibly can. And so that's what I do. I'd always check off coverage A. Coverage B unto itself is just the amount of money you need to tear down that undamaged value. And then coverage C unto itself is just upgrading both the damaged value as well as the undamaged value. But if I put, you know, $200,000 for coverage B, and I needed $250,000, I'm stuck at $200,000. If I overestimated the upgrade costs, I can't rob Peter to pay Paul unless I just say, let's do the combined limit. So to me, I'd always be checking off coverage A and then combining coverage B and C. And the insured has to get involved in this. They would probably have to talk to a contractor or a wrecking company about a value. You know, if they had to tear down like 3/4 of their building, how much would it cost to just get some kind of value? And then they'd also have to talk about to a contractor. If I had losses and I can't rebuild as it is, will it cost me more to rebuild as it needs to be? I think it's, you know, it's kind of like horseshoes. Getting close gets you some points, but you know, you're not going to be on the money, but some is certainly better than none. And as an agent, unless I'm in construction, I can't possibly tell them what they need. I can tell them the things they should ask other people. And again, I would just buy some coverage, and I would want it combined so I can use it as needed until it's gone. I would rather have too much than too little, but who knows? So I want to combine it. Now, we deal with this based on ordinances that are in play when the loss happens. And I never really thought about this, and obviously it must be happening out there. There's now a new option in the newer endorsement. All I have to do is check it off, and I guess I probably would, because who knows? When we're looking at Hurricane Michael or Hurricane Irma or the wildfires in California, a lot of devastation. Could building codes have already been in the works that weren't exactly finalized when the loss happened? But now, in between when the loss happened and when my insured gets a building permit, could more building codes be in play? And I guess that's happened out there. Or, we all know governments. Something bad happens, and then they have a knee-jerk reaction to life and all of a sudden create a law. I mean, if those of us that remember 1994 and flood insurance, it used to have a 5-day waiting period. And then the big Mississippi River, and you know, when it was up north, people got devastated and they didn't have the ability to buy insurance. But by the time it get down to Louisiana, people had gotten insurance because there was only a 5-day waiting period. So then we thought, oh, this can't happen, this isn't right. We'll create a law, and now it's a 30-day waiting period. And it's like, so we made the law, and it's like, well, what are banks going to do? They want proof of insurance, and now you got to wait 30 days. So governments do kind of not think about the insurance side of it and make laws, because there's not a lot of politicians that know insurance. So that option is new to this endorsement. And so I'm hoping my companies would be utilizing the new one. You know, a few years ago when I taught here, somebody said that in Boston it could take up to 9 months to get a building permit. No, laws can change in that amount of time. So this newer version would be helpful to a client that any zoning or building ordinance that comes into play after the loss happened, before they start construction, could be encompassed in this endorsement. And I guess theoretically, once you've got the building permit and start to do construction, any laws that come into play shouldn't apply to you then, because you've already gotten the building permit. So I would be looking for my companies to use this new one. And then other than that, this, you know, it is what it was. This just adds new language saying that laws come into play after the loss, before you start construction, we will let this endorsement address them. And it's a little bit kinder and gentler about conforming to the minimum standard. So there's a little bit of language change, but essentially it is for that.
Excuse me, Irene?
Yes.
Any idea of the cost?
It says that, you know, there's no cost involved. It's, you already bought the limit. Of course, now you can't change coverage. So it would just be allowing you to use the limit that you had for new ordinances. So there's no, they call it a broadening of coverage, but they didn't put any, ISO didn't attach any premium difference to it.
Makes no sense. Why wouldn't you just write it in the form? Why are you giving me the option of no?
Well, if my company's not utilizing this yet, you know, I guess you could maybe put an extra guesstimate in, just in case. So I would have to probably be picking limits on values I knew. Will my company let me, if I know that an ordinance is going to be changed, could I then increase the limit? I don't think that's going to happen. So this is really for after the loss happens, if an ordinance, it's really just a nicety. And I guess you could say, why couldn't they just put that into the coverage? I mean, really make it an E&O situation for an agent that you forgot to check it off? So that's a good question. I didn't think about that, but there is no premium difference that was assigned to that option. But I'm going to get pretty much zapped as an agent if the 2017 is being used and I don't check that option. So I've got to make myself aware of that, and everybody that works in my agency. So it still reinforces that if you already have ordinances that you have disregarded, like lead paint or something, that we're not going to deal with those. That's nothing new. We just rearranged where it was. And the last thing they do is, does anybody have like a flood endorsement attached, or earthquake endorsement attached, where you didn't buy the entire limit of insurance? They're just reinforcing that ordinance or law can apply, but if some other coverage that you've attached has a sublimit, then you're restricted to that sublimit and not the entire ordinance. So if you have some other coverages and you bought a lower limit, we're not going to let you have any more than that for the loss due to earthquake or flood. So I guess I wouldn't buy a lower limit. Tenants, improvements, and betterments. Where was I going with this? Okay. I've just lost my train of thought, which is sad when you're my age, to get it back. Where was I going with this? Okay. Tenants, improvements, and betterments. Business, personal property. When I go into a place and rearrange it, like I'm a restaurant and I do ambiance or a hairstylist or whatever, I can cover those building values under business personal property. But I guess some tenants go into buildings and all of a sudden the owner makes them responsible for building values that, you know, they have nothing to do with, that they didn't acquire, that were just there, that aren't necessarily have anything to do with their business, like maybe windows, glass, or other parts of the building. And they might be required to, according to the lease, have to pay for loss to them, but business personal property doesn't really address that, because they weren't additions, you know, that acquired or made at my expense. Anything I put into somebody else's building is not mine, But I do it because I need it for my business, and it makes sense if I have a longer lease. I can insure that under business personal property. But the landlord might just make me responsible for the glass or other areas of the building that I didn't necessarily acquire, that don't necessarily have anything to do with my business, but they just shifted the responsibility to me. So they've created an endorsement for that. So it's a good thing. I just need to know, the insured needs to read the contract, unless you opt to read it for them, which I know some agents do, but they need to know what they're responsible for. So there's always been an endorsement for glass, but any other type of any other building fixtures that really aren't pertinent to their business, but now become their responsibility by the landlord, can be insured here. So they never had that option before. Now, if I insure the landlord, and the landlord has shifted responsibility to the tenant, should I do something for the landlord? Because I forgot to put it in here, but theoretically, if I'm the landlord and I'm insuring the building, if I have co-insurance, am I supposed to add in all the building values, even those that are in your area? Because if I don't, could co-insurance be a problem for me? So if I'm insuring the landlord and they're shifting responsibility for glass or other sections of their building to the tenant, I definitely want to go with agreed value then, if nothing else. Or there is an endorsement for lasering out certain types of property from the definition of business if I stick with co-insurance. I forgot to put that in here. But as far as the tenant, if I'm insuring the tenant and their contract makes them responsible for certain building values that really can't be ascertained as their improvements and betterments, now there's an endorsement to do it. So, you know, machinery, building fixtures, whatever. So whatever they're responsible for by contract, they can insure now. They didn't have that option before. If they rent the whole building, and the lease makes them responsible, they just would have bought building insurance. But this is probably more for just sections of it. And so now they have their little building endorsement. Lucky them. And they can do it on a schedule basis. So you itemize what the fixtures are, the glass are, and put a value to it. And as long as you are required by contract to insure it, then we'll pay for the damage to it. And there's also, well, I didn't put it here. If you have co-insurance, you have to worry about that. Oh, and there's also an unscheduled one. So I can either do scheduled or unscheduled, so that would be blanket. So is my tenant responsible for insuring pieces of the building that have nothing to do with their improvements and betterments by contract? They can now have an endorsement to do it on a scheduled basis or an unscheduled basis. Again, it will never be more than what they're responsible for by contract. If they're not responsible, then who cares? But if they are, they can now do it. So glass and any other building items. So new options. Again, 2017, our company is allowing you to utilize them. And ordinance of law for tenants' improvements and betterments. And I was thinking of this afterwards. If I'm responsible for if I'm responsible for building values that are not considered improvements and betterments, I might also need ordinance of law coverage, and it would be the endorsement we just talked about, the CP 0405 for undamaged building value and the demolition of it. So I need the other ordinance of law endorsement to deal with these building values that have nothing to do with my improvements and betterments, but a contract made me responsible for. But as a tenant, if I put value into your building and there's a loss and an ordinance comes into play, do I have a problem with the upgrade costs or the inability to utilize those items if they have to be torn down? And so we never really had a tenant-specific ordinance of law endorsement, and now we do. So for tenants' improvements and betterments, I put a lot of value into your building, there's a loss, and now because I had reasonable accommodations, but now I have to change things around because of ADA requirements or new zoning requirements or changes to electrical requirements or plumbing requirements in my portion of the building, then I can insure those because now there's an ordinance of law endorsement created for me. So there's a lot of new variations in ordinance allowing improvements and betterments for tenants. There,
Irene,
yes.
All carriers adopting this, or is
No, they've been approved for use in the state of Massachusetts.
oh,
You know, and as always, companies never have to use anything. But sometimes if something's a good idea, you could ask if we can use these.
okay.
So, now that's the problem. ISO files, states approve, and then companies like using the forms they've been using forever and don't want to do it. I mean, you know, or they use their own. And they, you know, they can create their own variation. They can make these, you know, some companies create extension endorsement, little bells and whistles endorsement based on ISO. So you could look for those in some of the company-specific endorsements. But new options to deal with costs that aren't part of replacement costs. If I've got to change it, what I had is what I get, but new. The only little wrinkle with the ordinance law endorsement for improvements and betterments, it says in the fine print that if they weren't damaged, but because of an ordinance, the building must be torn down. The tenant has to make sure they take out anything that could be taken out and reused.
Oh,
Wait.
my God.
Just a little wrinkle. We don't say that under the ordinance of law endorsement for the building owner. If half the building has to be torn down because of an ordinance, we don't say you have to rip out pieces you can use. It's not said in the normal ordinance of law endorsement, but in this one, it is. So just, you know, it's, oh good, I can get all new stuff. No, if you can take it out and it is reusable. I mean, sometimes when you rip some stuff out, it's not reusable. But it'd be interesting to think about what the company's idea of reusable is and the insurance. It's a little bit of a little glitch in that, so. But it's always been a problem, and I guess people wanted something done with it, so. So I can't legally remove them, so I need ordinance, but it does stay in the fine print here. I have to, if the building's gonna be torn down, then it doesn't matter to the landlord. But if I can reuse the stuff, I have to, so it all depends. So other than that,
Does it stipulate they have to reuse it in that building, or can they?
no, again, the concept, well, wherever you're going to go,
Oh,
so, yeah, there you go.
take the coffee pipes.
So again, I have coverage A, you know, undamaged value, and then demolition of it. So again, it's always best to combine things. And so the building glass endorsement will be defunct because there are endorsements unscheduled to scheduled for tenants improvements and betterments, and then ordinance of law. Protective safeguards, well, companies use this endorsement if the insured has a sprinkler system. I got an email a couple years ago, the insured had a fire and the sprinkler system had been shut off and not utilized for like a year. I said, ooh. And the agent was upset that the company was invoking this endorsement to deny the fire loss. I said, well, the protective safeguards endorsement has a warranty in it. You know, you're getting rated based on a sprinkler that obviously you're not using and works. And one thing they did, that was on the second page of the endorsement, and people lose their train of thought after you look at the first page, didn't get there. I said, that's always been there. It is what it is, and you know, they can deny the claim. You can beg forgiveness for the stupidity of the insured, but I don't know how that's going to work for you. The good news is, I guess, they put it on the first page. Yay. But they also added something. They added another requirement that the on switch must always be on. I guess that's just a little. You know, this is nothing new. If the system is down for maintenance or there's a little problem and it's going to be back up and running in 48 hours, you don't need to tell us. That's nothing new. We just put it on the front page. But keeping that little on switch on is something you always have to do. So, and it says we don't pay fire if you don't comply with this endorsement. This is a warranty requirement. So not a lot of argument you're going to get. And special form has changed a little bit regarding accidental discharge from municipal water supplies. They now add in or private water supplies, because I guess in some parts of the country, towns and states want to privatize things. And sometimes when our policies don't keep up with what's going on, can we get pig-headed and look at the language the way it's written and not go along with what's going on in the world? Oh, this is what the policy says, you're stuck with it. Well, you know, things change. And instead of making an exclusion, we actually said things change. It's a water supply. It used to be the city of Boston. Boston doesn't want to deal with it. It's a private corporation. It's not any different. So it's just accidental discharge from private water supply versus private company. So privatization. Operated by a public or a private utility. So not all utilities have to be public, and it's still going to activate coverage. So that's a good thing. Ordinance of law, again, increase for loss of business income, lets you check off that, again, that the law changed after the loss but before you started construction. So we had to bring that in. So a little bit of zoning change just to comply with the property side of it. So property in ordinance of law, business income and extra expense. You know, if the ordinance changed, the problem is how much limit did you have? Will it be sufficient? I mean, if you know that they're talking about an ordinance change, then maybe it would be something to think about, and the insured might ask for more coverage just in case something bad happens. And I used to think we don't have a lot of widespread destruction in New England. That's not the same anymore. 20 years ago, anybody remember tornadoes?
No.
No. I guess global warming is doing something, I don't know, but it's creating tornadoes. They're getting to be more opportunity for that than the big one.
You don't even need a tornado.
I know.
Microburst.
But who knew? They used to be little things, but now tornadoes. I mean, just see the pictures of them all the time. I still, knock on wood, hurricanes. I think I have more of an opportunity for a tornado now than I do from a. So who knows? They might start looking at different building codes. But if the opportunity to check that off is there, I'm going to check it off just to make sure. If the law changes after the loss and before you start construction, then that ordinance, I just hope you have enough insurance to deal with it. So, there you go. Well, drones. How many of your insureds use drones?
Tell us about it.
I know, it's the thing now. And from a property side of the policy, do we cover drones? And we don't. Under property not covered, and this would be the BOP or the CP. This happens to be the CP. We lump it with the, you know, all kinds of vehicles as self-propelled machines, including aircraft or watercraft. So motor vehicles, airplanes, water, you know, that are licensed for use on public roads or are operated principally away from the described premises. Well, I guess that would be the drone. Unless you use it just to fly over your premises to see what's going on. So pretty much the value of the drone is not covered. And at this point, you need an endorsement, which ISO has created, or they've had marine insurance. Do you have a market for drones? So again, whether companies want to do it, but there is now a CP endorsement, limited coverage for unmanned aircraft. You have to describe the operations, and they have to, when the loss happens, they have to be used for that operation. Yes?
Would the liability be covered?
Well, that's next class.
Oh,
Well, I'm sorry, this is property, give me a break, you know? But yes, we have created endorsement for that too. Yes, we have. So again, for more money, we'll, you know, create the
Everything
endorsement.
for more money.
Everything for more money. You got to throw money at it, which I would, you know, that's my personal opinion in life. If it gives me the coverage I need, I'm willing to throw money at it. You just need to tell me the endorsements or the coverages are available. And if I don't want to throw money on it, then that's my fault. So from the standpoint of, we describe the operations, and you can schedule the aircraft, the unmanned aircraft, or you can blanket them, that's up to you, but they can be covered now. And some of them are quite expensive. And I think the little toy things you buy your kids, now they're thousands of dollars. So they can be covered, and yes, obviously they're away from the premises. So, because normally when we think of commercial property, we think once you get past 100 feet, we don't do much with coverage for you. But we're covering the value of these things. And you might also, there's an option for business income. I might want to think about that. Is that drone so important to my business that if it gets damaged, I can't do my business operations? So I'll want the corresponding business income coverage. But schedule limit, and I buy it on ACV or replacement cost basis. And I can do it on a blanket basis. And I can have my own deductible for this instead of the deductible that applies to the building or the business personal property. And with this endorsement, do I want business income to apply? And again, how important to my business is it? If it is, then this endorsement lets me do both, the property of it and the resulting loss of business income from the damage to it. So I have the opportunity to cover things, assuming the company wants to deal with it. And you know, with everything, new things we don't do right away, but they're becoming part of the world. So there's always a company that wants to be on the cutting edge. So I just need to represent them, or when people ask me who insures what, I just give you my standard 3 websites. I don't know. But there's got to be the ability, and do I want to talk the company into being the one to do it? So I can get extended business income. Again, if I'm rely on the drones, they get damaged. There's a fire in my building. It doesn't even have to be flying and damaged. And then I can't conduct my operations. How long will it take to replace the drones? How long will it take to get the business back? So we combine the property and business income together. I can only ask for this option for business income if I've bought business income coverage on the business to begin with. I can't just have it for loss of business income resulting from drones. I have to have business income coverage. So I will get whatever I have bought. Do I have business income and extra expense, or just business income, or just extra expense? Whatever I bought for my business as a whole, I can also opt to apply when the business income loss arises from loss to this type of equipment. Yeah. And interesting, I mean, we can even have, there's global economies now, global businesses, we can even extend the territory. I mean, Canada's fine, but you know, Mexico, not so much, but if I'm going into Mexico, there is a leeway for limited out of normal policy territory option. Whether you'll get it, I don't know, but it's an option. So everything to do with that drone and how it can affect my business is really encompassed in this one endorsement. So, hey. So in-flight and preparation for flight, being transported to or from the launch site. So it would be the way to go. Again, assuming that during the loss arises from my going to do a particular operation that I told you about. Real estate people, I guess, use drones. Insurance companies use drones. So a lot of businesses out there. Yeah. And if I rent them, not so much. That's not what we want to deal with. Unless if I rent it, I have to be contractually responsible for insuring them. It's more for when I'm owned. If I just rent it, do I have to insure it? It depends on the contract. But if I do, if it's a long-term rental, great. Yeah. So unmanned aircraft owned by you or rented or leased to you if you have a contractual responsibility to insure, which is usually a tenant in the property policy anyways, you know. contractual responsibility to insure. There you go. Hey. And unmanned aircraft. Designed, manufactured, modified after manufactured to be controlled directly by a person from within or on the aircraft. There you go. Oh, what am I doing with this one? Oh, there's a limited one. Oh, this is, I can blanket it. I could just blanket things. So. And again, I talked about it before, but this is in the outline where I put it. Whatever business income coverage I have can apply to this exposure. And then lastly, motor vehicles, food trucks, library trucks, anything, any business I have that I do mobily, pet grooming. That's what I use now. Because I go into different places, I have somebody come, my dog knows her, and life is good. If I need my truck to commit my business, and I insure the vehicle under a business auto policy, correct? And I damage it, do I have a little problem with conducting my business? And if I have specialized equipment, I could buy loss of rental income, but I'm never going to be able to rent that kind of vehicle. It's just impossible. So if I can't conduct my business until the loss is taken care of, and now it's not just going to Chevrolet or Ford and buying another van, it's getting all the equipment put back in. So I don't have the ability to operate because of this collision or comprehensive loss. And pretty much business income is written by ISO under the BOPR. The CP doesn't deal with that. I need a described location. So, suspension of operation due to loss or damage at described to premises by a covered cause of loss. Well, the vehicle is out and about, it gets damaged, I can't operate. So I need coverage for that. There is an endorsement under commercial auto, but have the companies approve that, it might be easier to get it through my business income coverage. So off-premises interruption of business vehicles and mobile equipment. I need to buy a business income policy, and I attach this endorsement. And so now when there's a loss to that and I can't operate, I have loss of business income. I have my commercial auto policy to pay for a loss to the vehicle, and now I have my inability to operate covered under my business income coverage. It's modified. The loss didn't have to happen on just a described premises. So medical service vehicles, food trucks, repair and maintenance vehicle, mobile diagnostics. So there's a lot of different types of vehicles that might have this need to cover the loss of income. And it depends, it gets attached to whatever type of policy. Did I just have an extra expense policy? Did I have a business income and extra expense? So it just allows me to activate coverage from whatever policy I attach it to. I can stay in business. Anybody have a business income loss for their clients? What's worse to adjust, a business income loss or a property loss?
Business income.
Business income. So it's not going to make it any easier, but at least it gives you the ability to have coverage. That's what I've heard from agents, but that's like loss of use under the homeowner's policy. It's easy to identify the values that are damaged, but to project the amount of money that you lost gets a little bit cumbersome. But if you don't have the coverage, you ain't getting nothing, so at least it gives you the ability. For some of these vehicles, does anybody insure a mobile pet groomer? No? Okay. Yeah. You can go out and insure things. So you just have to identify the vehicle, the equipment that's attached to it. We're not paying for the damage to it, but now we know what the operation is, and we'll cover the resulting loss of income. So did you have business income and extra expense? Both of these could be identified and coverage would apply, or just extra expense. Now, from the standpoint of an insurance agency, what are you more likely to need? Loss of business income or extra expense? Extra expense. Because I don't expect you ever to shut down. I mean, really, it's like a bank. So we might buy business income and extra expense, or we might just buy an extra expense policy. So what I bought This just lets me activate it. And I would think mobile pet grooming, if I ain't operating, I ain't making any money, so extra expense is more important to me. So as long as I have that, now I will be able to activate the coverage. And I have to buy, it gets the special form cause of loss, but I have to opt for collision separately. So of course I would, since I'm over the road. It gives me that ability. So I get special form cause of loss, but I have to ask for collision and pay a premium for it. And it's a 6-page endorsement. Yay. And with that happy note, we're done.
Oh, wow.
What? Oh, I gotta do another check-in. You're not done. Oh, wow. Okay, so you got your second check-in. Minimize your screen and see you in a little bit. This was. Unless there are questions, we can talk.